Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and this is ThetaWaveTrader. Welcome this morning, folks, to the Friday, the 16th of January, 2026. I hope you're all having a good day, and I hope your week is working out quite well. Going into the weekend, markets look just choppy to me. I don't see a lot of opportunity here right now. We're sitting inside a lot of chop. We've had buy side taken, we've had sell side taken. On the 4-hour chart, there's a lot of liquidity sitting up there above the daily, but the daily has taken a run on its short-term highs. There's a little intermediate term highs back there in December, around December 8th. There's a big pool of liquidity up there with a SIBI and a BISI on the opposing side up to 301. So we could take a run on that. I'd like to see a slam back against this trend line. Just hold all those longs and just smash through the longs and drive this lower. But if you're a trend line kind of reader, then you see nothing but upside heading for those highs. I think that would be a real shot in the arm for the retail people if you decide to continue to follow this trend line all the way up and you take it over those highs. You'll be sitting there going, haha, we told you so, which I hope works well for you guys. I hope it works. Right now I've got nothing. We're sitting in the middle of, we just passed through the midpoint of that 814 was the midpoint of this last day and a half, the little high and the low, and we're in the midpoint. So, and I don't see anything really of that's noteworthy in here other than the fact that we ran through a BISI on the 4-hour chart. Let me show you here. We've ran through this BISI. We created it, and now we ran through the top of it on a close. We've come back inside it. We've tapped it. Now, for me, generally, I'm more bullish than I am bearish right now. So if we do see a run up, I'd like to see this run up here, clear out these highs, maybe even reach up into those the rejection block sitting at 56. If we pop through that rejection block, look for the run on that big pool of liquidity on the daily. So what I want to see now is, if you look at it on a 4-hour chart, if you're looking at this large range that we're in here right now, let me get this out of here because those things, I don't use that chart for buying and selling buttons. If you look over here, this large range, we have a discount box here, which we've hit. We've run up into the premium box, which is up here. So we've hit discount, premium, discount, and now we're hitting premium again. So the question is, we're boxing in here right now, back and forth, back and forth, back and forth. So if you're just looking for quick little runs on liquidity, this candle's high, 9775, 9775. So there's a small little pool right in here, and we're just tapped it right there and there. Now I want to see that go higher. I want to see that take out this rejection block here at 885, 886. And then I want to see us run through this 924 and take these highs. Now it's done its thing down here. There's no reason why it should come back down in here. So I think it's done here. I want to see it start going a little higher now. And If it runs back through that level again on a close, then I'm targeting this and that little pool of liquidity down there again. And if we get through that, then we're heading lower. So all I've got is $9.23 all the way down to $6.45. It's a small range to play in right now. It's less than 300 handles. But you can do a lot with that. Right now it's not clean. It's not acting clean at all. So I'm going to wait for probably 7 o'clock, or sorry, 7:30 my time, which is 9:30 Eastern time. Even that closing through it. A little sloppy on the price action there. Let's have a look at oil. Bull traps here. Not letting price get by that high. Nothing on there either. Where's this going? Well, it hasn't been this low. Back to 2008. This is the lowest it's ever been. Well, it can only go to zero. Over 33,000 now. This is going well. Not so good there. On the hourly, look at the chop in there. That's not going well. Nope. See anything noteworthy in there. That's the nice entry right there in silver. Right on the money. If you got long in silver at 88.21, using the little techniques we talk about every morning, then you're off and running. Pay yourself at the high, move it break even, and let it buck. So now you want to see this hold. I don't want to see any more than 50% of that let go. So come back, tap this, and let's get through this next one, and then you got some free run to this and these. It's good, little market structure shift already. Get one more big push above here, and then I think you're free to have a bigger run right into 50% of that whole range right there. So let's see if this level holds. And we don't want to see any more than that. This box already, have we not? Yes, we have. That's the coffee downside we were looking for. That just hit it perfectly. Now we've got to change in direction. Enter long here. Premium. It's a box to box trade. Back into here. We've already traded through that. You want to see this get tagged. Now I want to see it run back through here. Then take out this premium box again and go higher. If we close below here, look for a run back in this box below us. That's the coffee run. That's been an interesting run. I was watching this going, man, that gap down almost $6, $8. It dropped. So even if your stop loss was sitting just below that candle, that's where you got taken out. It's those big sudden gap downs. And that's literally from Thursday. In Thursday. That's 8 a.m. And then 4, 8 p.m. Wow. Ugly gap times, hey? Look at this live cattle. Went lower, back into this discount box, hit the discount box, and then just literally gapped up through the premium box. Didn't even come back and tag that, just literally went from here. There's a little tiny imbalance right here. Stretch it out, you'll see it right there. Came back inside that and left. Dixie. I'm looking for Dixie to continue to come lower. It's hard to say now because, you know, you've got this breaker here. We've come down into the breaker. We've changed direction. We've traded up into it. So I'd like to see how it attacks this breaker here. Or if we get back above this small little swing point. So otherwise, this is bearish for me, which is I'm slightly bullish in all the other currencies. So if we get a close above 116.20, look for a retest, and then look for a discount portion in here. So you have to get way down into the bottom of that discount of that SIBI to catch it. In other words, return to a CAM Model 1 here. Look for a pop-up, and then targeting the breaker. Do your internal range liquidity hunt and wait for that breaker to get taken to the upside. If it does, then that means this breaker down here is going to get taken and we're going to head lower, and then start targeting this gap because there's nothing else down there. You'd be looking for this line again. So this is what I'd like to see if we can get through the carrot and then start targeting this down here. Banks are doing fine. They're still inside that range. This could be just one of those little minor retraces. Didn't take any market structure out. And now we're back up into the premium portion. So that's all good. Banks are looking fine. DAX. Let's have a look at the DAX. Okay, well, we're down in the discount now. We're right up and through the mean threshold of that candle. Got nothing for you. Nothing clean. There's nothing clean there. If we can get back above here on the 5-minute, start targeting this upper zone up here. So get up on top of this and start targeting up here. It's only like 24 handles, but that's what the market's giving us right now. It's not a really a great run opportunity right here, unless it just explodes out of here, because it's been compressing for a while now. We had the compression again. Disney sideways. We're in this range here still, right in the discount portion. So 91.66 is the bottom. You don't want to see that close below there. See how we run above this already? You got a swing here. You've got this SIBI. We've come back into the go, no go zone. We slightly popped up above it, but then we hit the midpoint of that, rolled over. Now, if we take this out on the downside, we're going to continue this little trend lower in whatever that stock is. Small range here from 10.20. So $1. And you're sitting in the middle of that range right now, so got nothing there. Let's see if this continues to trend up into our objective this morning. You got to get above 836 here on a close. Let's have a look at where we're at here. I haven't even checked to see if we're online yet. I could be just talking to myself here. Oh no, we're on. Let me say good morning to everybody here. Morning, Hadi. Hans, good morning, sir. Is there no sound? Oh, good morning, good morning. Is it optional expiration date? Randy, good morning. Shepard, good morning. All right. If there's something you want me to look at, I think the only thing I saw that was relatively good was silver. We didn't want to see it get below there. It's just kind of nickeled below it. If you take the whole 50% there of the whole two candles, this would sit right there. How does that look on our oops, have I got that right? %50 would put us right there. So that puts us, you see how it just kind of right below it, it tags it. Oh yeah, we want to see it get above it first, right? Gets above it, that's right on the money, that's good, that's holding. Now you want to see this continue to march up through this guy here and take out this buy side liquidity. A little liquidity raid there and then just keep pushing higher. Right now we've just come up to the SIBI, we filled it, and now we're pulling back down, so it's not really got any major legs here. I don't know why everything's just kind of slowing right down right now, but it's a Friday. We're in January. Don't have your expectations too high, even though Christmas was a nice little, there was some nice action at Christmas. That was a sweet short there at a 5-minute. Nice. January 16th, option expiration date. Got it. Is there anything you want me to look at specifically? I've just gone through them all and nothing's just saying to me, now this is a tasty little treat. I want this to keep running. That's very delicious. This is poop in the bed. It had great expectations. Hit that premium box and then quickly snapped off of that. Literally gapped down the next day and decided, no, we're not having any of that. Has anybody got anything out there you want me to look at? Nothing, hey? People are already bailing on me here. That's all right. That's okay. It's nothing. The markets are not clear this morning. Let's see if the S&P can give us something here. Nope. We're stuck inside this range. If you like boxing, my goodness, that's a good box to box to box bounce back and forth. Yeah, I don't see anything in here either. Oh yeah, I went over silver. That's the only one that looks like it's got any play today. We have a change in direction. Wait for the bull trap to let go once the change in direction has occurred. So I'm going to stay here till something more delicious presents itself. So this here, you see how we went through it? The bull trap held place, sent you back through it. Then you got the rejection block. You didn't get the new low. Now what we want to see is this extension model. You want to see it come back into this box and then go lower. The moment it breaks through that box, you're on the wrong side of it. Okay, so it comes up and you go, oh, now I want to see it go down. Coming back in, you go, why? You've already ran into this once. Why are you going back up? Why are you going back up? No. Then all of a sudden it opens up here and says, you're on the wrong side. Dink, tags it, starts going higher. So if your stop loss was sitting here, right there's your fail safe. Right? That's the rule. If it violates the rule, comes back, tags you, that's the only small little opportunity you had to get out. So if you're long, that's why we say this is the optimum place. If you're going to go short, optimum place is to go in right there. Because if you're wrong and it closes above, comes back and tags it, you get to get out at break even. If you leave it, and that's whatever your rule has to be, whatever you decide there, but that's what a rule I try to stick by. As soon as it tags it, get out, break even, move to the sidelines and wait. Now wait for this high to get taken or wait for this low to get taken because it showed you that it's going through it. It's going through it. That means move to the sidelines and wait for the extremes to break. So you wait for this here. It breaks right there. And you go, great. Now if we can come back and tag this, I'd like to catch that long. Comes back, tags it right there. And then you can get long. Comes back, tags it one more time. So you go, ugh, we got this change in direction here. We've taken out an old high. And we got another bull trap right here. Got a change in direction. Does it trade through it? Yes, it does. Well, you got that one there and that one there. If it trades through this on the close, you're on the wrong side of it. It wicks down. Finally comes back up. Does not close below it. So that candle right there, if you're trading during its formation, or freak out on the formation of that candle and say, oh, it's on the wrong side. All I'm doing is just coming back into this old candle back here again. And we didn't violate that with a close. So no market structure shift back to the opposite direction, just a small internal range liquidity hunt from box to box. It hits it. Notice that the bodies respect that civvy. This did some damage. So if you're trailing your stop loss up, it would have hit you. And then would have continued higher. So you go, okay, so if it does go higher, I want to get back in off of this BISI, comes back into the BISI right here, and then continues going higher. So even if you're on the wrong side of it, wait for it to get back in sync with it, and then continue going higher. So I just see higher for silver right now. That's the only one that for me is relatively close to clean price action. Our NQ is finally moving, albeit choppy and slowly. Those are, that's not even a participation. That's like chewing on barbed wire, man. Upside objective has been hit right here. So that premium box has been hit right there. Snap, and I want to see if it comes back down through that. That would make a really icky proposition for inside this range here. Just start rolling over and come back down and run through this bottom half now. That would be kind of crap price action you can expect on the markets. If we can get back through that level, then we're going to start looking for the rejection block above you, which is way up here. 884-ish. So if we can get through here, look for 884. Let's get back to silver because that's the only one that really is interesting me right now. So we've had a body break above here. That's good. We've come back inside the mean threshold of this. So this now becomes this right here. See how right there, I'm not form fitting it. I'm just showing you that's the line in the sand. So for me, if I was in this, I would put my stop loss right there because you don't want to see this roll over, this coming over here like that. Don't want to see it. Mean threshold, that's all you want to see. Tap and go. I don't want to see it run through there again. It's just sloppy price action. Not acting the way I want it to act anyway. So there's the mean threshold. See a little tap on it? Now start going higher. You don't want to come lower than that. If you're looking for a specific data point, that is. Did you go over silver yet? Yes, looks like it's in a turnaround. Yes, it is, Vitaly. Darren, I've rewatched your video, Time in a Bottle. Is there a chance you'll try it one more time during your stream, maybe? Oh, I could do Time in a Bottle for you if you like. All right, so what's our levels? We're talking about Time in a Bottle, right? You're looking at 00, 2, 3, 5, 7, 9, 10, 11. That's or 12, 9, 10, 11, 12. That's the squabblers. But 9 and 10 is the turn. 11 and 12, you can get a turn. Usually at 12, they all fight for a reverse. Okay, I'll say what the numbers are first before I start going through these things here to prove it. And then you have 16, 17, or 14 that I did not put in the video, but 14 is one. 16, 17, 18, 19 are all squabblers as well. You'll see this little bouncing back and forth. They like to argue over who's going to be the best candle. 21, 27, 30, 32, 38, 40, 42, 45, 50, 52, 55, and 58. Okay. I know there's a lot of candles there, and there's a lot of small ones that weren't mentioned, and you say, well, that's pretty much all of them, isn't it? But watch. You start on the 1 hour. So start on where the hour begins. There's the 58 right there. See that? So we have 2. There's 00. There's 2, making a high. 1, 2. Then you've got 7. Here's your 9 and 10. Here's 14, and this one's 15 actually. It makes the high here. Here's the 16, 17, 18. Here's the squabblers. Here's 18. There's 19. 20, 20, 21. Nothing there. 26. There's 27. There's 30. 32, 33, 34, 35, 36. This is the crazy Ivan, right? Into 38. There's 38. he comes back. If he sees you, he comes, gets you. There's 40 or 38, 39, 40 starts the turn. 42, not so much there. 45, 47, 48, 50, 52 is right here. 55, nothing there. 57, 58 makes the turn again. There's the 00. There's the 2. There's the 3. There's the 5. There's the 9-10 turn. There's the 12. 16, 17. There's the squabblers. And now we're back into 21. So now how do you utilize that? So from time in a bottle is very specific to a specific time. So when you see some of those, you say, well, some of those didn't really work out. So what you want to do now is you want to take the time in the bottle, those specific times, and along with what I've told you about these fair value gaps and price imbalances, order blocks, all these key levels that we look for, these data points. You're looking for those data points at those, use those times now. You use time to access the data points. So for example, if this is our reversal situation, right? I want to see if 38 is 38's here. If this makes our low, that's our little crazy Ivan look back. I've changed direction. I do a quick look back over my shoulder. I don't see anything. So I start to run higher. And now I look to access this level again with what time am I sitting at? So I'm at 40. So I'm looking at, there's 45, 46. And I want to say, do we come back and tag this at the 47 or the 48 range, right? There's 48, retagging it. And then you go higher and you go, great. Now I want to say, does this, if I break this high here, what number do I have that supports coming back to here? Where am I at now? So that's 49, 50. So if I get a 52 come back into here, there's 52, 52 right here. That tags that old high. And you might say that's good enough for me as soon as it tags this high, because it broke this, broke this, broke this, broke this, but did not break that one there. So what's the next number that's going to support that level? I want to see that come back at 52, hold that, and then run higher. There's 55, it breaks that. Now I say 58 to 00. If we get it stays inside here, I'm all right with that. So you go 56, 57, 58, comes back and tags it. Now, so if you say at 58, I'm going to buy that long. And I'm going to put my stop loss down here. So, and you can allow it to go all the way back in here. So you go 58, 59, there's 00, 1, 2, and the 3. You say 3, that's it. I'm already into my mean threshold of that candle. 3 has to hold. Because if I see 4 and 5 starting to break this low here, then I can say, well, 5 better break. So I say 5, the next 3 minutes it has to stay inside that thing. Because if we start getting to 7, 8, 9, 10, you're expecting 9, 10 to make the turn before your stop loss gets taken out. So you're looking at those specific numbers for time to make a reversal. So 3 does, and then quickly punches up through that high. You go, great. Now if I can get 5 and 7, 9, 10 to come back into this and hold it. So there's 9, 10 coming back in to hold it, and you want to see it run higher. Does that make sense? That's the detailed way of, or more advanced way of using specific times at specific data points. Does that make sense, Hans? And that's a nugget of information. If you take that, you've got to be able to be super focused to do that. You've got to have like an obsessive compulsive disorder to manage that kind of a level of time and price. And you've got to be zeroed in so tight to your charts to use time in a bottle. It's for the OCD, ADHD type person. You can hyper focus because you can quite easily lose your time train of thought. Hence the reason I have my where is it? Magic numbers right here. So that's the reminder. So it's a visual reminder of, okay, what number am I looking for? Where am I coming into my levels? Those times. When I see that number going, I go, oh yeah, that reminds me we're at 27. So 27, I should see that continue going higher. And break through. So then you start comparing where we are inside the chart and where does 27 want to take us. We're back down into this one right here. So I want to see 27 continue pushing higher and make a turn. If 27 makes a low here, then I want to see that pushing higher, or just having this candle continue pushing here, because I got 24. Nope. 27, 30, 32 are our numbers. So the bottom of the hour, you usually see a turn. You'll see the crazy Ivan and then see whether or not it goes. Oh, there you go. There's a big run on. Finally, a run through. Now we're running for that liquidity above us. Look for that to 89 level. Now 887. Now if you're all pissed off because you've missed this, don't be. If you've caught it off of this reversal here, then good for you. There's the premium box there. You take out the premium box on a close. You get back inside it. See how you traded above it, below it, above it, and then back into it, and then you started going higher. Change in direction. Then you broke through the change in direction, came back into it. That's just sloppy price action, man. That came all the way back into this candle's mean threshold. Right there, mean threshold. And then that BISI was broken again to the upside, then come back down. So once you're looking at this, you're going, okay, it's reverse direction. As soon as it comes back in there, I'll get short. And then it rips right through. You go, oh, I'm on the wrong side of this. If it comes back in, I can get long on that. Now you can go long, and then you catch it long. And again, our bias was long anyway, so. Thanks, Darren. I'll try to keep a closer eye on time and price. Maybe my head will work a little overtime. Yeah. So you're just looking for 886. If you're looking to protect your money right now and just kind of nibble some profits out, 886 is a great place to do that. Or, sorry, where we got here? Yeah, 886. Right now, that's just hit. Oh, it's through that already. So 886, and then after 886, I'm looking for 924. You see that? That is ripping through your stop losses. If you're pulling too tight, that's just welcome to the open of the day. What's silver doing? Look at that turn. See how it broke that level that we were looking for? On a close, it came back, tagged it, and what did it do? It rolled over. So have your rule. Once you see that broke to the downside, we're on the wrong side of it. You wanted to see 27 go higher, right? There's 27. It went higher, made the high, and then rolled over. And now we're, oh no, here's 27. So 27 continued to push down. 30, we're into 30 here. Now does this 30 hold the line? And we start to push our way back up. So you're looking for 32 to start pushing back into here. And then if it hits here, you want to see that roll over and go down to 36, 38 down into here. So there's 31. Now, if 32 breaks this high, that's awesome. So we're in the bull trap right now. Okay, so here's 30. We've closed above. There's 31. This is 32. Now you want to see 32 stay inside here. And now you want to see it push higher. It's time, price, 32. Now if 32 just makes a little swing here, then continues pushing down, you don't want to see 38 take out the low. So you want to see 32 give you a nice pop up here, 33, 34, drift back into here, looking at Crazy Ivan to see if he sees you coming behind him. Nope. And then starts running higher. Now if 32 makes this and does not clear out the bull trap, look for continuation on the downside. So if it comes into here, 32, 34, look for 38 to be your key level next. $32 makes a swing. So remember, this is the bottom of the hour. This is the typical Crazy Ivan time. So 32 to 38. Targeting this for 38 if we lose this here. That little poke through, guess where I want to go? So now if it breaks through here, watch for a retest. Right there. Now you want to see it come lower. You can retest all the way up to here. And then roll over and come lower. If it's working the way we want it to work, we should see all that hold price. And now if it trades through it, that's the no-go zone right now. Trades through, back into the SIBI. Then we're going higher. You got to stay on the horse. It's a matter of changing your mind on the fly. That's why you don't marry a trade. You stay on the horse and you watch as it starts to spin. It can throw you off. See how it traded above it, below it. Now it's back above it again. Now we're looking at this level. This is the Crazy Ivan. So 35. This would be great if we can get 36 push up here. And then 38 come back and tag this. If it doesn't break that, watch this one here. There's 36. So what happens is when you're using this time in a bottle and you start to see the candles not creating the high you're expecting on the candle that I'm calling for, expect that to continue to the next candle that I call for. So if that doesn't make the 38 and 39 keeps pushing, then look for 40, 42 to make a high. Or a little temporary swing back to push higher. So this 36, so now I'm expecting 38 to give us, so if 36 is a nice bold candle, this is great. 37 creates a small little fair value gap. 38 looks like the one that wants to come back in here. That would be the nice little retest. Or 38 gives us our retest of this here. Ideally, we want to see a fair value gap form above here. So watch 42 seconds. So we're sitting right at the 37 candles. The next candle, we want to see create our entry for a long. Now just watch this. This is for that time in a bottle, using time in a bottle as a precision time and price, looking for a specific price and specific times. You got 9 seconds left. We don't want to see that fill in. Small little candle forming right there. Maurice, good morning. There's 38. A plus setup, right? So A plus is just leaves right away. A would have been a nice little pop down into here. B would have been a nice consequent encroachment. C 75% a D fulfill. So now 38's made that little swing high. So this is the crazy Ivan look back from 30. The low created at 30 to 38. So now if 38 starts to, and 39 starts to close and go higher, then away we go. Looking for 40, 45, 42, 45. So what we're looking for right here, right now, is I'd love to see a little retest on this. There's 38, 39's going higher. So I expect to see that use this candle. And if that if it comes through, then 40, 42 makes this low or keeps pushing higher. This right there on top of it right now. There's 40. Oh, that's 39, sorry. 40, 42 might put us in here. We're not getting any progression forward. Give me my 40, 42 into here. Here's 40. There's the tag. Stop loss will sit down here. And it takes out that high, move to break even. You can take one off there at the high. Now you've made a bit of profit and it's zero stress for your trade. That's using time in a bottle. So if that comes back in as 41, so 42, I don't want to see 40. I want to see 41 start to just use this midpoint and go higher Now it tagged me out. Pay yourself there. So there's like $900 you pay yourself right there. I didn't want to see the mean threshold give way. This, so we'll wait. So maybe this 45 will give, or 42, sorry. The next candle gives me one more little pop into here. If it doesn't, so be it. Walk away with $800 in your pocket. Here's 42. Just give me one more little punch down into here. Even if you tag this down here would be nice. Morning, Paula. Well, Paulette. We have a new swing. So that could be a 42 swing right there. Come on, dig into here. There you go. I'll go one more along there. And then I'm going to put my stop loss down here. So that's the bounce off this high here. It's a full fill. So I don't like the fact that we've actually closed below that. So I'm going to close out my trade. If we've closed below there, the rule is if it closes below it, get out. So this could roll over and come lower now inside this range, and we could be looking for this. So for me now, I've got to get back above that level for continuation. Or close above here and then come back and tag that line one more time and push higher. But then you've got your bull trap sitting right there. So when they're overlapping like that, just give it the luxury of leaving or watch. If it pulls back and comes back into the zone because it's acting all choppy, then see, now we've traded back above it again, traded below it, trade above it. So what do? You wait for the extreme. So come back and tag that. Now leave. Right there. You got to leave. You can come in right back into the bottom of it if you like 0.85, but right there, leave. That 42 makes its low. So the next one is 45. And then 48. So you can see how you just nibble, just that time alone, you've nibbled almost $1,200 out of the market just on two handles, whatever. So there's the tap, specific data point you don't want to see break, and now go higher. This is a 45 now. It's going to make a swing point, either lower or higher. And we're sitting in a zone now. We're waiting for it to break out. Do you need a retest of the high to go higher? Yes. Yes, I need to see this right here come back. It can come into there one more time. And now I want to see it go higher from here. If it starts to eat through this again, we're in that little bull flag type of scenario that's coming up here. But I want to see how the bodies are holding on it. It's got to go here. This is where you start to say it's got to get some legs. It's done its thing. Coming back into here again is not what I'm interested in. See how it broke above or broke below right here, then broke above. Now it's going to, if it breaks below again, you can see why you keep getting beat up in there. If you keep saying, oh, it's gone above, I'm going to go long. Oh, it's gone below, I'm going to go short. Nope. One time. That's why as soon as it broke there and came back in, gave me a couple of bucks to get me out, saved my ass. And then You wait. So this mean threshold here is the next line that you don't want to see that break right there. All right, body's holding on this. Starting to run a little higher. So far, so good. Now you've got 47, 48. We got a body just closing above here on a close. Come back, mean threshold, start pushing higher. Not a very convincing push, but it's a close above nonetheless. Come back down into the mean threshold, push higher. See how we're looking for specific data points at specific times. So this is the 48 candle right now. Now 50, 52, we could see how we got this little BISSY. That's 49. 50 as a retest, or this order block here. 50, push up. 51, 52 makes new highs. So you see how that was just closed above it, came back just enough to tag it. Now we've made a new high. And yeah, you'd have to pay yourself at that little thing there. And it's just a little check and balance, right? It's about saying, if it comes back against me, I don't want to take a loss. I'm going to take my coffee money. I'm going to move my stop loss, and I don't want to see it come back through here. It's done its thing. If this is aggressive, it should just leave here. Now that's the level of, you have to be sure. Like if you're saying, well, my stop loss is sitting way down here. Well, there's way too many things that need to break before it comes down there. So you now paid yourself. Your stop loss is sitting just above your entry point, and now it's come back and taken you out. So you've made a small little chunk right there. And at one lot on a silver would be a couple $100. So you're out, right? Because here's your 50, 52. That comes back and retests this BISSY or the mean threshold of this candle. So I'm looking for right here. I don't want to see it come any lower than the bottom of that BISSY. And that's a 50. So right there, I could go long. And the stop loss for me will go right here. Now, you want to watch that 50 to stop right there. I don't want to see that come any lower. So you got 10 seconds. Watch where that closes. If it's on the wrong side, 4, 3, 2, 1. Good, it's inside the box. I don't want to see that coming back down again. There's 50, so this should start going higher now. If it doesn't, then 52 is going to come back and take us out. There's that premium discount portion. And there it is right here. You've come all the way back inside that. We're literally opened on it, doing a little bit of damage with the wick, and send it higher. If it takes out that high, pay yourself or move your stop loss to break even. So now my stop loss is going to sit right on there because I don't want to see it come through anymore. That's done its thing. You either get the hell out of here. Now here's your 52. 52, come back and tag it. Don't sweep me on a new low, just send me higher. That's not good. See how it's running back into this wick? 50% of that wick is all I want to see. But it's a 52 candle, so chances are it's going to make a low and take me out there. There's the low. See how you don't want to see that once it comes back into that level, you want to see it leave. And then you see it coming back and you go, why are you coming back in here? You've done your thing, time to leave. Here's your 52. Now 55 keeps pushing through. Then we're looking for a run below this low. See how he closed above it, below it, chop, chop, chop. You can get chopped up in there pretty good. Here's 53, so 54, 50, or 55 now. Watch this level here. It hasn't been tested, so this is probably the level that we're looking for. This is the breaker. So take your breaker, mark it out here. So I want to see 55 take the breaker. If you're looking at the small consolidation here, if you're looking for a cam model entry, you want to see you see a displacement candle above or below this consolidation. And if you see a displacement candle that creates a fair value gap, you want to see institutional order flow entry drill off of that, or look for the level that's taken. Like if we lose the discount here, then we're coming back lower. Then you look for that displacement fair value gap breakthrough here, and then continue to look for range extension continuation. In the consolidation, wait for your, holy, do you guys ever get those who wanted to go higher? Look at that. There's that level we talked about, 886, literally on the money, and then smash. That's why I tell you guys, pay yourself at rejection blocks. If you don't, you get your ass handed to you. Right there is a good example. Right on the freaking money, man. That's why you pay yourself at rejection blocks. Forget the freaking highs. Everybody wants to run for the damn highs all the time. And here you just got your ass handed to you. If you thought that we were running on all that liquidity and you thought that the daily is where we wanted to see it go, but it told you it's got to break that spot. And it didn't. It hit it and rejected off of it. Sell side is lost right here. As soon as you close below that sell side, we're looking for this breaker here now to get retested. You get the sell side broken, breakers retested, and you go lower. Textbook. And no, I wasn't in it. I was too busy over here yakking away. There's 55. So 56 is continuing. So 57, 58, look for a run down into here. This breaker and the discount SIBI. Because if this continues to chop, then 58 will put in here 60, your 00 to 5 and 7. So I want to see this 58 get down into this. There's your breaker now. That's 56. So we're inside the breaker now. It's finally got retested. We didn't test it here. Now we've retested it at 57. I'd like to see I don't want to see 58 make a swing in here, unless it does. If it pops up above this candle, and 59 comes back in, we get a small little turn in here, and then continues to push down into 00 and 2. But otherwise, let's just watch to see if this happens here. We get a little swing high, and then continue to push down into 0, 00 and 2. There's the retest of this level. Come on down now. Now 59 takes that out on the high. So that's the little swing point we want to see. If that 59 takes that out, then we're looking for that to hold. And I want to see this breaker here, or this little, yeah, it is a breaker. It takes out this little low. There's a swing point here. So I want to see that one get taken on the upside. If that high gets closed above. If not, I'm expecting it to come down into this discount box again. And this is the problem when you're in this tight consolidation and you're looking at time now. You see that? Now we're breaking above it. I want to see that continue pushing up to 0 and 2. We've retested the low. It's not giving me that. Look for 0 and 2 to get down here. Wait for this to close. Got 1 second. Now I'm not going to wait for 00. That 59 made a new high. Still off of here. That's 59, isn't it? Yeah, 59. This is 00 here now. Keep your eye on the mean threshold of this candle. Chop, chop. Wait for a breakout. get over to NQ for a second. So I'm looking for this downside here now of 698. So here's my line. Will be 698. And I want to see if that holds price or we break through it. That's the small range I've been talking about this morning. And if we get through that, this is what I explained to you earlier in the video, so I'm not form fitting it now. I looked for the premium side and the discount side. Here's the discount side over here. Premium side's up here. Rejection block is where we were aiming for. And now we're looking for this discount box down here at 696. Sorry, 696. So that's whatever that candle's high is. The high is, sorry, 695. 695. And now I want to see if the 695 creates a swing point. If it does, it's just ran up, ran down, froze on that. And then I've got one other little thing right here. Then I'm going to go do this. Watch. This is the spillover. This is something new I'm looking at. Is the spillover around here. I'm expecting a spillover to occur. And the spillover is usually 20. That's the wick damage that I start to look for now. So we've come all the way back inside this daily or new day opening gap. We've tagged the new day opening gap right there. And now we're starting to run back up inside here again. So we're just got chopping around inside the zone. So I'll wait for this little bull flag or bull trap to let go. Now we've got a swing. Wait for the bull trap to let go. Come back on top of it. And you can get back in a run inside this range. Because on the hourly, if you're looking at my time in a bottle, there's a 9 and there's a 10 turn. Right? So here's the retest right there. You want to see that go higher. Stop loss will sit down just below the mean threshold of this candle. I don't want to see it come ripping all the way back through here. If it does, then I take a hit. And this bull trap here, again, the rule should be that if there's a bull trap attached to this, you have to wait for the bull trap to let go. Otherwise, this starts to close through here on the wrong side. And I'll wait for the next 10 seconds. It'll either take me out or give me an opportunity to take some of that loss off here. I'll wait to see where it closes. I see how it closed below. So now I start chasing this up. And I try to get out of my trade there. And I close out there. I'm on the wrong side of it, so that should go shorter now. Come on, close it out. Close it out. Thank you. So now I'm on the wrong side of it. And if it trades back through it, now you wait for the upper and lower ends to let go. That bull trap held price. I got in a little early off of here, expecting a nice little run higher, and it ran below it. My rule is don't play with that. Oh, is that a little tiny gap there? Yes, it is. Look at that. I'll stretch it right out. You'll see it. I missed it. Look at that. Right back into it. That's the one I should have been looking for, not that one. And now we'll see if that goes higher. Oh, I didn't see that. Right on the money. That should emphasize to you guys why that little tiny imbalance is back there. You got to stretch it out and find them because they're sitting right there. It can come back. What I'm thinking is the first SIBI is actually this little guy right here. And it came back and tagged it. And my stop loss was sitting right there in it. So out she goes. Oh no, it wasn't. My stop loss was down here. I chased it back up thinking I was on the wrong side of it. But I was on the right side of it, just on, should have given that a little bit more wiggle room. Dang. Okay, so now I'm expecting to see this let go. I'm not going to chase it now. I'm going to wait for the next setup. That's a good lesson for all of us right there. Good lesson. 5 seconds, close above. Don't go too far. There we go. And I'll come back and give us a kiss. Right, Gar. So now I don't want to see this mean threshold let go. And we've already visited this, so I don't see why we want to come back into that. So the stop loss will sit. Typically it sits one tick below that thing there, but because your first or your SIBI is here, that's all I want to give it. And if it rips through and takes me out, again, it's not acting the way I want it to act, so you take your loss. I want to see this hold, that hold. I didn't want to see the mean threshold in 2 seconds. We'll see what that mean threshold is. See, now it's going to come back and revisit this level. Yeah, through the mean threshold there. I'm out. I'll wait. If it gets back above this level, that's the next level I'll look for support. If we come back in here one more time and visit this, I'll catch another run higher. See, now that it's closed through here, I expected to see this not run like that. I expected to see it come back in here one more time because it took the mean threshold out on a close. So this has now become my area of interest with my little tiny guy down there. That's better. Keep pushing higher now. I can catch along there. Now I don't want to see it get back in here. I'll leave that because if that comes back and tags that one more time, not for me. And there you go. It stabbed through, took my stop. It didn't take my stop. Holy wow, it didn't even print in here enough to take my stop. I'm out. I don't like that. Let's go over to silver, see how silver's acting. So we got, there's 1, 2, 3, 4, 7. There's 7, making a high, 8, 9, 10. Retest. I like to see it along there on that retest. You've got this here, you've got this here, and it's a 9-10 turn. It's quite choppy here right now, but I'm going to go with the 910 turn there, right inside that BISI. Stop loss will sit just down here. So this is the squabblers we're getting into now. 9, 10, 11, and 12. Start pushing higher. So you get through that BISI there now. It's right up to the top of the BISI. I'm going to go to profit right here. I don't want to see, I want to see that actually, you know, at least give me a little profit. I want to make sure it's breaking through here now, right? So that's the next extension rule. It's got to get back up in here and go higher. So as soon as it hits that high, pay yourself, or at least move to break even, because that's the premium level, right? So if it hits that and rolls over, the fears, especially if we haven't got the 10 didn't make the low here, the 12 makes a swing, and then you've got 14. I'm looking for 14. Get down here now. This now becomes my mean threshold. So look for 14 to make a swing. I'm just trying to use use the time in a bottle, exact times, exact levels. $14 now. Tagging the high. Not quite a new low yet. We hit lower on this one. We are. Break through this guy, come back, tag that guy, and do a short right there. Stop loss will go above here. I don't want to see it break back through here now. I want to see it just come back in. You can tag it and then roll over and come lower, looking for this level right here. I've got my range extension already. I want to see a continuation now. As soon as it breaks that low, you can pay yourself a portion there, and then move your stop loss to break even. Mine's in a little low, so you'd have to just move to break even if that was right there. Give that one some legs, see how it does. There's the 14 right off our no-go line right there. That's it, mean threshold. 14, I want to see that is the swing point. and start going higher now. So now, because we got a tight little range here, 14 has to hold, and I want to see us get 15, 16, and then 16, 17, 18, the next squabblers up here. Or if they continue to eat through that candle, then I'm looking for 16, 17, 18 to take out these lows here and run back into this discount box and breaker again. See how that breaker held price? Body's respected the top of it, went higher. No body below here yet. Here's their 17 we're on now. 17. So squabblers, 16, 17, 18. So 16 could be the low, then 17, 18. Wherever 17 goes, 18 comes back against it, and then 19 goes against that. Typically, 18 reverses on 19. Yeah, 18 goes against 17. They're squabbling. Who's going to make this? Who's going to create this swing? 18 turns on 17. Now the next level we don't want to see let go is right here. Right on that level. Chances are we might be reaching for this. This is 18, makes the low. Now 19 typically goes against 18 and starts going higher. So if 19 comes back through and takes out this low, look for 20, 21 to make the low here. Nice little range extension. Move to break even. That's a 20 point. Pay yourself at 20 points. Oops. Pay yourself there. And we'll just now we've got a stress-free trade, so we'll just let it run now. And let's go back to silver. 19 ran all the way down, tagged our SIBI. So 16, 17, 18, 19. 19 did not reverse on 18, so I'm expecting 20, 21 to make our little swing point here. We've now broken below here, so 20 coming into this breaker, 21 to make a swing low. And if 21 gives way and then 22 takes out 21, then look for 27 to continue going lower, so you can kind of support your time supporting the continual run. So if we eat back through that little tiny level right there, watch that line right there at 89,025, right there. Stop right there. And 21. So maybe 21 makes a little pop up here and then continues to push lower. So now that we've cleared out this sell side, there's your splash over wick. We paid ourselves at the splash over. Now if this turns into a buy side, then that'll take us out. I'll close out the trade because this will be a CAM model, or sorry, a take profit model 3. So the take profit model 3 is simply if I get a close above that candle, I close the trade. Oops, I clicked the button. Shouldn't have clicked the button. Click the button. Anyway, wait for it to close above that before you close it out. I didn't mean to do that. I was looking at that line there and I was going to drag the line, and I actually had it on my X button on my price. I'm looking to take this thing here and move it. My brain was where my finger wasn't. So we'll see if that closes above here now. A couple little pokes up there saying, hey, I want to go back this way. So this might be the little precursor for reversal. Because precision is tap and go, right? And I'm going to feel better now that I got out. That would have come back and got my stop loss anyway. So spillover, that's the new thing I introduced today, is the spillover. And there's precision for you for spillover. Where's this spillover you speak of? Where did you get this spillover? Go back over it. You'll hear me talk about it here. That's my downside objective. That's the wick reference. That's the wick reference. That's the, that's the spillover. That's the reference I wanted to see close on. And that's the wick. That's the spillover. And 11 of you got that new piece of information. So I kind of feel good that my brain went click, clicked on that off now. So anyway, let's go see what our silver's up to. See how that 21, 22, we said 20, look for 27 now. Look at that. If the 21 does not give you the run higher, then you want to see this. And you see 22, take that out, then go straight to 27. Because you got from 22 to 27 is your next run. I don't know if you're still watching this, Hans, on the minute by minute. You wanted me to do a time in a bottle. This is time in a bottle, but you have to stay really focused on it. So what do you want to see now for 27? This is 26. I want to see 27 pull back into here. Now we've got a body close below here. I want to see 27 tag this low or this candle, last candle right here. So this is 26. I want to see set 27 give me an institutional order flow entry drill all the way up into here and here. You got to allow all of this area for a continuation model. And that's how aggressive it is. Oh, that's so 26. We're on 26 still. You still in here, Hans? Is this the next one? Yeah. We want to see if it closes through here. I'm not worried about that one. I'm looking at this one. So we'll see where the next 3 seconds goes. Here's the 27 candle. It makes a low. It literally closes below it, opens on it, and goes lower. See that? Zoom in, you'll see it. See how we close below it, opened on it, running lower. As soon as it takes that low, pay yourself and move your stop loss to break even. That's a run. That's a big run now. So now this becomes the area of go, no go. That now becomes the new no-go zone. So if 27 has made the low now, so we're at the bottom of the hour. We're expecting a reversal and the bottom of the hour, right? We've taken out these lows now at 8:33. Oh, not quite there yet. So 8:33. So we want to see these lows get taken. So it's 27. So now we're looking for 30.32. See how it just keeps going? If it takes out the previous dot, then wait for the next 30.32. So there's the swing on the lows. And we're at 28. So I want to see 30.32. Like 30 create the swing, 32.38. Come back and tag this and then start Crazy Ivan. He sees you, he's coming for you. If not, then 30.32 takes out these lows here. On our 5-minute chart, this could be our next price leg lower. Looking for 85.82. You're still here. Does this make sense? You see how tricky it can be? So there's a set of rules around take the time in a bottle. I didn't put all the rules up there, but there's specific rules that you need to use for this. But it's a very minute, hyper-focused type of model to use. See how they're continuing? So now this is the 30 candle. Bottom of the hour, we expect to see a reversal, 30.32. Now you say to yourself, I've swept the lows. There's the 30. I want to see it start to move back up again now. If 31 takes this out, look for continuation. And then we're looking for down here, right? Because we've, on the 5-minute, if we come back and retest right there at 3, we're just shy of hitting it. So let's see if we hit it now. Let's see if 31.32, it hits right into, right there at 50. So at the top of this, I want to see this come up, tag that on the 32 candle, and then start to roll over and go lower. How's my guy doing here? There's the retest. Just shy of touching that retest. And still going lower. There you go. 30, 32. Here's 32 now. 30, 31. This is 32. So I'm expecting to see that come lower now. We've done that little run back into here, and we can still allow ourselves that punch up into here. We've done it once, twice. So we've got your institutional order flow entry drill. I want to see that. So this is a crazy Ivan time, right? So this is where you tend to see a look back. And if 32 continues to drop below 31, then look for 36, 38, making a further dive down into that 85 level. This is the continuation model. So as soon as this one came up here like this and took out the previous low, you pay yourself at that. Move your stop loss to break even. It comes back, takes you out, you're done. Wait for this whole crazy Ivan thing to unfold. And look for 38. And you may say, those are not big enough profits for me, but it's a way to kind of protect yourself when you're looking at specific time. You want time to act exactly as you want, otherwise don't trade it. And again, you don't have to follow my rules around. If it breaks a low, pay yourself, move to break even. You could just say, screw that, man. You're in a short. I'm taking the short. I'm leaving my stop loss up here. You said the rule was if I break that to the upside, then I'm on the wrong side of that. So I'm going to leave my stop loss right there. I'm not doing your take the previous candle, the next candle's low rule. Screw that. I'm going to stay right there. I'm going to give it some room to grow. Fair enough. That's okay too. My goodness, gold is on a run down too, hey? Look at that. Gold's on a plummet. So market structure shift, body breaks below it. You trade back into the mean threshold of that candle. Slam it down. Break through this little discount SIBI. Look for a range extension. Look at that. Trades right back into it. Perfect. Gives you your range extension perfectly. Range extension. Holy smokes. Does it give you? There's your entry. And there's your entry. 1, 2, and you allow for, so 1, 2, 3, 4, 5, 6. So there's 3 inside the BISI, 3 inside the breaker. 1 and 2 you would have got. That's it. Targeting low. As soon as it hits low, break even, pay yourself at that low. And then if it continues to run through and tag that, you can load another one on, go short. Takes out that rejection block, pay yourself at the low, let the rest run. Unless you have a higher time frame objective. So looking for, now that we've taken out that spillover, right? We've ran through that premium or that discount box we were looking for. We've come back and we've retested it. And now we're going lower. So that's your continuation. Now I'm looking for way down here. So next level is tagging off of right now at 642. You take out 642, we're looking for, my next one I'm looking for is 585. Watch the sensitivity at 585. Crazy Ivan. is 36, 38. Crazy Ivan does his little look back, bottom of the hour. And then if he sees you, in other words, if he break this on the upside, he sees you, he's coming for you. If he doesn't see you, he'll roll over and come back down. So we want to see this as the Crazy Ivan look back and then the fail, and hope he doesn't see you. It's very tricky, yes. You have to be very confident in what we're doing in the morning, every morning at these specific levels, and looking for the time to reach specific levels. And when the price is acting as it should, it'll give you more precision. Crazy Ivan, 38, keeps on coming. Wait to the end of this candle. See how we've got a little swing here? If Ivan gives you a run through here on a close, wait, because then you got 40.42 next. So if that 38 pops through here and you get 40.42, tag this. I want to see that go higher. Other guy doing here, looking good, looking for 558 and 585. Gold. So swing here at 38. We're into 40.42 now. Keeping your eye on this at level here. So you got that 42 to 45. I'm expecting some sort of change or swing to occur at those minute candles. And our NASDAQ is still driving lower. After 58, 5, 55, 1 is the next one. This could be another huge price leg lower. this just retesting this 5-minute low here, that'd be ideal, where you want to see that hit here, roll over and go lower now. This is 42. Start driving lower now. That's a nice little retest right there. Institutional order flow entry drill. Let's start really pushing this lower. Tag that. I'm going to go one short there. I want to see this hold price now. Stop loss will go just above here. I don't want to see it break that high. Just above it. On the 5-minute, you got to be above you've got to be above here. If we're trading on a 5-minute, you're going to be above the 5-minute breaker here. Because that would suck if that came through here and hit this breaker instead. What's the high on that candle? 060. That's a mitigation block. Well, we'll see what we get. It looks like it's going to come back into here some more. Mean threshold of that candle. Really where your line of your sand's got to be. Nope, line in the sand is mean threshold. 5 minutes. I'm going to let that sit there. Thanks for so much for your help there, and I'll be watching your stream from today again this weekend. No worries, buddy. Have a great weekend. Breather stays low. We're coming into this new day opening gap here. Or is this the new week opening gap? At 597. We just hit it. Yeah, there's that new day opening gap there. We're right back into that. Gold is on a potential turn here. What's their 1 minute look like? It is on a turn. Look at that. Traded through it, traded through it. Back and forth, back and forth. Now running higher. Now if you come back into here, that's a long. Stop loss will go down below the cam 1 entry. We'll see that go higher. Pay myself at the high. Silver. Yeah, it's running. That's what I was afraid of. We'd come back into that breaker some more. because it's really not a breaker, it's a mitigation block, and they're weaker than breakers. This is the breaker here. So if that keeps driving higher, it's going to take my stop loss and it will come back into this breaker above us, which I didn't want to see. I wanted to see this mean threshold hold. So that has to hold. So now my stop loss is going to go right there. I'm at the no-go zone. See that right there? It's going to come get me. I'm out. I'm not trusting that. We've already broke this high here for a swing. We're into the no-go zone. I'll take a 3,000 loss on that because that's going to go higher. That mitigation block I don't see it's going to hold. And maybe it does, but we're already digging into the mean threshold of it. So if you get all three of them, that high is going to get taken out next. So your ass is next at 821. That means gold should be moving higher, and it is. So this will offset the loss I just took on that silver trade. I'll let that go. And there's the $3,000 I lost in silver. That'll get me back there. And how's our NQ doing? It's got to get above here. Not interested in that. That's got to get above there. Not worried about that. Mr. Jones breaking through this breaker here. That breaker is just getting eaten right now. So body break trades above it right there, tags it, goes higher. So there's a small change in direction there. Oil. It's the new macro. The new macro is beginning. I don't know why this shit's doing this. I don't know why, like crudes. If anybody can tell me why this stupid thing turns up here, I have no idea. See, the price is there, but this stupid billing crap, I have no idea why it's doing this. No idea. And I can't get anything on that time frame. Go to a 5 minute, I still can't get anything in there. No idea why this is doing this. Anybody know why? Why this is here and that's there? I don't know what's going on with that. But this retest right here, I want to see that go lower here. See that punch lower now. Into that. Yeah, I'd like to see that go lower in oil. And look at that. Gas is still going lower. How shitty is that? Keep on up there. Get on up. Bitcoin. Ooh, it's a slash and grab. That's lovely. Oh, that's perfect. I'm gonna get out of that. Where are we at here? Gold. So, Institute, this is the failure or not failure. I don't want to see a full fill there. I want to see a C level grade, which is what that is right now. And I want to see that. In other words, I don't want to see it fail this spot here. In other words, I don't want to see that fill in. I want to see that go a lot higher. So I'll take 1800 out of that. If it takes the new high, I'll pay myself again one more. or just move right in here. That's it, I'm out. Too much chop. So if this is the turn here, this could be another big rundown. So I'm watching right here now. We close below that level. So there's a full fill now, and we're starting to wick through it. So I want to see if this holds here now. And then we use that as support to come back down. So I'm really inside this small range here now, and you pull your fib from low to high, you start getting your change in direction and your 50%. See on a 15-minute chart, this is an institutional order flow entry drill for continuation on the downside. So you can see how we got a change in direction here. Institutional order flow entry drill. Now this is supporting a change direction. That's why I didn't want this to come back down in there. It came through, took my profit. Otherwise, I'd be out at, here's my entry right there. See, that would have been a loss versus pay myself at the high, pay myself again when I demand that price stay above there. It didn't, it came through. So now I'm looking for a retest here. I'm going to go lower. So I want to see if this now uses that BISI to go lower. So I don't want to see this get through that high. If it does, then it's too much chop for me. Right there, you can load another one on there at that high. I don't want to see any more than that. You can start coming lower. You see this? This is where you can get caught. See how it ran above and came back into this SIBI? So the SIBI and that BISI are fighting. So I'm kind of hoping right now that the BISI is the high. So that's it. I don't want to see it go any higher than that. It's going to come lower. So that's a specific data point I don't want to see go higher. I'll take 600 loss on that, because this is coming back into here to go higher. So I can argue both directions, and if you can argue both directions, stay out of it. So now what I want to see is this structure break to the upside, find support at that, and then get back in it again. So this is not an institutional order flow entry drill. Get on back on the horse. Let's spin around and throw you off. Get back on when as soon as you see this high get broken here on a close. And we're sitting at 11 a.m. now, right? This is the macro time. Now I'm going to let that go. This should hold price now. That should run higher. And you're looking for 45.86. Yeah, silver doing. Silver's come back into our consequent encroachment. Right on a 52 candle. Here's 55. right back into the mean threshold of that candle. Now 58. You want to see this just start leaving here now. I think 58 has to take that out on the upside, or 58 has to take this out on the downside. Now, if you're looking for support, you want 52 to hold support, 55 to get broken, and then 58 continue marching higher. So between those two, that's the one you want to see give. That's the one you want to see hold if you're bullish. Look at 58 just sitting in there, hey? What's a partial? Where are you? You're on gold, Hadi? Oh, you took a partial at the high. Good for you. I've only got 2 on there, so I'm going to let that run. What one are we on here? Which one were we looking at? Oh, no, silver. 58. Look at that, just compressing here. See 58? It's like that little pendant thing Michael talks about. 58, so you got 00 and 2. 2 has to take that out or that out. Bullish, that should hold. And 2, you want to see take that and give you a nice little 5 reversal for 7, 8, 9 higher. You don't want to see another 7 minutes of this waffling around in here. This you want to see hold now. Here's 00. Nice little swing at 00. Oh, I should just go into the code and fix this. Stand by. Let me go into the code there. Can I go into the code? I can. Oh, it can't be edited. Dang. Okay. Two, you want to go, you want to see 2 get up here. I'd like to see 1 and then 2 come back and create a swing here and then send it higher. There you go. Come back down here. Just pop below here and send it higher. Because the alternative is if this is a consolidation that 2 sets a new high and then rolls over and goes lower. And it hasn't. So I want to see now it's popped in below that low. That's what I want to see. There's your institutional order flow entry drill. Keep going higher. There's a little tiny busy here. I want to see that stay open and push higher. You don't want to see it filling in now on a 2 candle. And there it's filling in. A 15-minute chart. What on the which one are we looking at, Hadi? For which candle? Where are you at? I keep jumping around between charts. Which one are you on? So that's the swing low we're looking for 2. Now I want to see it keep pushing higher. Silver. You're bearish on this. Yeah, that is potentially bearish for sure. I'm just trying to teach a little bit about time in a bottle today. My focus is on time in a bottle. So that's what we wanted to see on time. And so far, it's perfectly acting the way I wanted it to act. That's what you use when you use specific times. You want to see a little low. I didn't want to see it fill in, but it filled in. Doesn't matter. It's still the swing point. Now I want to see 2. And I want to see that go up to 5, going higher. We're inside this range now. Remember I told you about the breaker, this mitigation block not holding. That's why I wasn't so keen on that one. That's why I got out earlier in here, Hadi, because this is a mitigation block. It's not as strong as this breaker. So chances are we're heading for the breaker, which is what we're heading for and what we've just hit. So now whether or not this breaker holds, I'm looking at 50% of the breaker. And if that gives way, then screw that noise. Look for the top of it. And we're starting to run for the premium up here. I'm looking for these guys. And I'm just using time in a bottle to get there. And I'm using the higher time frames to watch. And I'm using time in a bottle and staying right on. Just if you'd, this is my thoughts on what Michael was saying is, you don't need, remember when he said, I don't know if you guys ever heard him say this, but he said, you don't need candles to trade the market. Now, what would he mean by that? What would he mean by you don't need candles to trade the market? So if you don't need candles to trade the market, then it must be time, very specific to time. And that's what time in a bottle is all about. I've bottled up time and I've given it to you as a precision level. And how you use it, this is how you use it. And as you can see, there's times where it gets really choppy and just can beat you up. So when you see that kind of stuff, you don't get into that market, but B, you start to look for specific times that we're expecting specific levels to get hit and supported. And then why, like we said back here, I want to see 58. This 58 take out this high. It didn't. It stayed in the middle. So you go, okay, so now I want to see 00 either retest this, and if you're bullish, you want to see it either test the low or the high of it, or just start marching higher. Well, there's the 00. It creates a little swing, and then since higher, you go, great. Then I want 2 to create another little swing and send it higher. Creates a little swing, sends it higher. That's the bullishness, and that's the time, price, looking off specific levels. There's the precision data point off of a 2-minute candle to see it go higher. Does that make sense? I hope it makes sense. And I know, Hans, if you're watching this on the weekend, go back over the charts, like just scan back to a specific time and practice. Like put your chart like this and then just say, what time am I on? I'm on a 43 candle right there. So I'm expecting 45. Where am I expecting 45 to hit? In here. And if it breaks through that, then I'm expecting 48 to come back and support it, or 50 to come back and support it, right? So there's 42, 44. It runs, if it ran through it, it didn't run through it. It stayed on it. So that's 40, 42, 44, 44, 45 is right here. That makes the swing low, little tiny low. Look at it. See how it makes a little swing low there? Then 48. You want to see now this has to come back into here and support it. So go over here to 48. And there's 40, 50 around there. It's 48. 50 comes back. Now you want to see 50 hold that. If 50 closes below it, and you're looking at 52 to get back in there. So there's 51, 52 doesn't. 52 continues to rip through. 53, 54, 55 is a turn. Now look at this next level, 58. You want to see get back into here, or if the body breaks above the high here, you want to see 58 come back into here, or a double zero. There's 58. Doesn't come back into it. We haven't had a body break above the high, so wait. It literally closes on it. Rips all the way through. So there's 59, double zero. Looking for a tag on this low, double zero. There's double zero. There's the low. Tag it. There's the precision. So if you don't get what you're looking for here, just wait. And then just say, what I want to see is zero. Come back and tag that. This is zero. Opens. You go, just come back and give me a kiss here, and I'm going to get short on that. And sure enough, then it carries on. So what you expect and what you demand from the market are going to be two different things. Meanwhile, back over in gold, we are now moving to profit and let it run. I want to be above here now, right? So this is my take profit model 3. That's our long. That'll take back the 3,000 we lost in the other one. That'll put me in some profit. And we go up on the day. So you don't win them all, but in the end, if you just keep following the rules, eventually you get where you need to go. Do you understand why that was, this mitigation block was not the strongest one, Hadi? And you see why this breaker here now becomes important. So if you take that 15-minute breaker, I know you were bearish in here still, and you definitely remain, you think about that, you go, okay, that should hold in a 15-minute chart. You're still bearish. Oh, you're still talking 15. You weren't talking 5. Sorry, you were talking 5. It's 15. Martian gold, yes sir, took the high. Still bearish. You're still bearish for me. Silver, OIC, yes sir, 100%. So, and also keep in mind that in a 5-minute chart here, if we're going to reverse, and you see the reversal on that 1-minute chart, and I think to myself, where could I retrace back to? 50%, 62%. So I'm watching right there. So if I lose that on a close right now, I close out my gold trade if it breaks below there. So that little order block I want to see act as support now. I want to see a body break that high. Then my stop loss will go right into here because I want to see this act like support, because we're way up in this. If I take this whole range here, see how I'm at 62%. So I'm at right there at 62. So I want to make sure I'm protected. Oh, fuck. Get that thing out of there. I want to be protecting my stop loss now. I could still come into here. This is the graded response. I have to, I'm arguing with myself now. I've hit 62%. I'm going to take 1 off there. I'm going to take 1 off there. So we'll get some money on that one. And now I want to see it break that high and start aiming for 62%. My stop loss is over 50. If you're using your internal range liquidity hunt, then you pay yourself there. If this rolls over on me and takes me out now, it'll take out that candle, and I don't want to see it come below 50%. I want to see an A level entry run here now. Graded response. B, it could come to B and just give me a slap and take me out and go higher, but I don't want to risk losing an extra 400 bucks out of that. I paid myself at 62. This is the potential for a reversal, right? And if silver's up there, silver's looking for a reversal, and there's your reversal right there in silver. That's a short. And if they're short now, Hadi, on your 15-minute chart, completely support you, buddy. You're just coming back into the consolidation for a CAM Model 1 entry for a short right there. It ran lower. Now I want to see, where are we looking at? This right here. You want to see that BISI hold price back now and go lower. And that's what you're seeing. You're seeing a turnaround here on a 5-minute chart. We're back inside that breaker. That breaker, look at this, look at this, look at this. Let me make this bigger so you can all see this. You need to see this. So again, mitigation block, it's the last swing low that does not take this high out right there. See that? It reverses and then makes a new swing low. This now takes out those highs. This becomes the breaker. Mitigation block, breaker. That's how I interpret it anyway. And as soon as you see that, you go, when we were talking about it down here, you go, that's the weaker one. The breaker's up here. I know the mitigation blocks are weaker than breaker blocks. So we have a run. The lower time frame, we saw the reversal. And then the next thing you want to see is, do we have the balls to get through this level and start running for that breaker again? If we do, then I want to say, is the mean threshold of that breaker the line in the sand for me? And let me just put that right on the beezer there. There's 50%. So we ran right up into 62% of that block, that breaker block. So 50% is right here, hits it, a little bit of wick through there, and now you want to see it roll over and come back down. So there's that line in the sand you don't want to see get closed through. Hit it and see how we get a kick off of that. That's the kind of thing you want to see. Now you want to see this roll over. So you go down to the lower time frames and you say, do I see a reversal here? And it's sitting right here. I don't want to see it break back through there. If it breaks through there again, then I'm on the wrong side of it. That mean threshold's going to get attacked again. So I want to see that hold price right now and put one short there. And if I'm wrong, I'll put my stop loss right above the high. I don't want to see that 62% get retagged. And the fail-safe is if I close above that high. Get some legs here. And I usually give this 1 or 2, 3 candles, make up its mind, and then I bail. So what you want to see here is a market structure shift as well. As soon as it takes that high, I'll move to break even. I've only got one on anyway. I'll move to break even, and that's the cost of the trade right there. So it doesn't cost me anything, and we'll see if it comes back now. So there you go. You'd pay yourself right there. Let's just pay yourself. What the hell? Now I want to see if this continues going lower. I only have one on there, so a quick little return, take another grand out of that. Because what's the potential here? It's to come back to this level right here, right? Hit that sucker and then start to go higher again. So now if I can argue both sides of the fence, I'm not interested. Wait till you get something clearer, right? So higher time frame says that's a good place to turn around. That's a good place to get short. Move your stop loss to break even. So we'll see if this would have continued on. And I'm targeting the next spot down here. And meanwhile, back at the ranch, we've got gold still performing for us. Now I'm going to sit right there. There's that A-level entry we talked about. Don't want to see it get any lower than that. Now we've got a reversal, so I'm out. That's the rule. I've got a reversal and my take profit model 3. That's a reversal situation. Break that market structure to the downside, we're going lower. Let's take profit model 3. Entry, exit. Scale out at 62%. See it almost at 70% optimum trade entry reversal. Well, there you go. There's your optimum trade entry reversal. So I want to see that roll over and come lower now. Now, because it's so close to the swing, wait for the market structure to shift to prove that. Otherwise, and you want to see a nice displacement candle here. Come back and tag this low, 50% of the wick, or that candle right there as the continuation. That's the top. Send it down. Send it down. And now my gold, is this gold? Yes, it is gold. So I'm out of that trade because I saw the reverse. And here's the reverse. Came back in, traded back into that candle. It does it once, twice. That's fine. All the way up to the top gives you all the scaled in that you need. As soon as it takes out that low, pay yourself, move your stop loss to break even. You got a risk-free trade. You got a risk-free trade. Rejection block, pay yourself. Believe me, one lot on a gold trade at that rejection block pays you a couple $100. Again, we're looking at very specific data points inside this range, and that's a critical one. Because if you don't get this and it runs back through here, it's not because it failed, it's because you neglected to pay yourself at the rejection block, which I've harped on now for months and months. How's our NQ doing now? ID. Ooh, look at that. So market structure shift, or the first bullish candle. After a swing, look back at the first bullish candle. And you always hear me talking about the first SIBI you have, and you notice there's no SIBI in here, but you see these immediate rebalances. Boom, comes back, immediately rebalances it, and then goes lower, right? I treat this as a fair value gap. This one here, see how they immediately comes back and rebalances it? Treat that as a fair value gap, and then you got the bull candle or the bull trap. If you're not happy with this, you say, no, I prefer to have SIBIs there. That's fine too. We're just shy of our objective. That's fine too. Wait for the bull trap to let go above you. So that's these two together. Take that one. It finally closes above you right here. Comes back in, tags that bull trap, and then sends it higher. Aim for your premium box. You're done. You're scaling yourself out now. So you're in, scaling yourself out. That's the ideal setup in there. So the bodies are still respecting this. Don't like the wicks. The fact that you're coming back in here multiple times after you've loaded up right there. Why do we need to come back in there? Don't like it. Sidelines. Too many candles. 1, 2, 3. And it's still sitting inside that zone. This could continue pushing higher now. And what do we got above us? We got this one right here. My next target would be 602 or 75% of the range. What am I looking for there at 702? Anybody tell me? See how as soon as you see this, ask yourself, why is it coming back in here? If it's not, we're failing to go lower, we're not taking out this low, and we've decided to come back in. We've done our thing here. This is the trigger. You can get short there. Great, way you go. And it doesn't. It comes back into it again. You go, that's not good. And then you literally see this one open, come back into it, and then finally start to break through it. None of those two candles right there are not acting the way you want them to act. So as soon as you start seeing that going through, you go, no way, man. And it gives you a little poke. It says, guess where I want to go? Poke. Come back in, load up a bit more, and then send it higher. Now this whole thing here, I would wait now because I got out of this long here. And now you just wait for either the retest of this once it's broke through it. So I'm looking for this to come back and retest. I've got range extension already. So now what I want to see is continuation. I want to see a body close above here, not just a wick run. And now I want to see this come back, tag here, and you must have no more run below that Bissy's low. You can come back in and tag it for a long. I prefer to see a body above here, but that's our extension. I'm looking for a continuation model now. And because there's no body that's broken this high yet, this now becomes the go, no go zone. So again, you don't have to enter in any trades here. You just want you to watch it. That's the go, no go zone. Unless we break that high on a close, different story. Now I've got a different thing I'm looking, a different type of setup I'm looking for here. And I'm not too worried about the fact, like, don't beat myself up because I missed. I said, oh, I got out here. My take profit model 3 doesn't work. It sucks. No, it doesn't. It works fine. And I'm happy to take that out there and then just wait for the next, get back on the horse for the re-entry. So now we've got a body closed above here. I like to see a retest of this. And I'll even put like a little order, pending order there. And then you can go all the way back into a pending order on this mean threshold here. And stop loss will sit below that low. And if it takes that high, move yourself to break even. That's the retest one. You can put one in there. Now, if it's really acting the way you want it to act, you want to see it just leave from here now. Just come back and retest that. It seems to have worked this midpoint. It's worked the bottom half. It's worked the top half. I want to see it leave from here now. Just come back and tag it. That's your data point. Reference. Go higher. It starts to, you see that start to act like, I'm getting sluggish. I'm not interested in that. I want to see it really start to accelerate through here now. And what are we doing in silver? We have a SIBI. We've broken above it. And we've also taken out this bull trap. We've come back into the bull trap. Same kind of thing in silver. I want to see that go higher now. What's going on in this guy? We've hit the premium box. Remember that one we were aiming for up here? Nailed it perfectly. And now you've got a change in direction right here, a retest, and now I want to see that go lower. So that's a sell for me. I don't want to see it break back through here. And yeah, I'm really kind of catching this late in the trade here. this change in direction here. I don't even want to see it get back into there. There's a small little imbalance right there. I think that's a small imbalance. Yes, it is. So that's the top of it. 10. So it's going to be one of those little tap it and go. So it can run all the way back up in there. And that's the market structure shift you want to see. And you have to ask yourself, where am I in that? I may have got in a little too early on that. Or a little too late, I should say. Yeah, see how I'm below 50%? You want to discount. So I can take one more up there. That'll bump me up above that. Now I want to see this hold right here. See how we've got above here now? I've got to pull my stop loss to above that. I'm on the wrong side. Ah, shitballs. I'm on the wrong side of this now because this is a change in direction right here. So I've got this one and that one. It's potentially going to come up to here. I was going to say I'm in the wrong side of it. Just see how it ran through here. And I was already in the premium or the discount side, paying a discount to hope to get a better discount. And then all of a sudden it changed direction on us right here. Came back inside. Now it's sending it higher. So stay on the horse. We're going higher. So now I'll wait till I get a structure shift above here. And then you got this guy here. So then you come back in and use this BISI as support to continue pushing higher. There's 50% of it. And you're getting into lunch hour now. So the pros and cons of whether you're going short, long. Too busy chatting. Got to watch your charts. I missed the opportunity to take a portion off there. See how we got a small little imbalance right here, right there. I got 17 seconds to make up my mind whether I want that. I'm out. Watch that level right there. The fact that we're even keep wicking back into this, I don't like that. Watch that close there. See how close below it? Come back into it. Now let's see if it come lower. Right there, you see that? Again, it's a take profit model 3, but it's a quick way to save your ass if you're on the wrong side, and we're really tight here. So, oh, let me get that out of there. I'm not going to entertain that anymore either. So fail safe. I think we got 25 bucks out of that or something like that. Paid for the trade. It's not moving the way you want it to. Move to the sidelines. We're getting into 11:30 lunch hour now. So you're going to wait. Oh yeah, we're back in silver again. Let's do this time in a bottle. Was it silver? What one were we doing time in a bottle on? See how we traded back through that level? Came back into it. There's the 25, 26, 27. Boom. 27 candle. Ran above the high. Come back, give it a little kiss. Now you got the 30, 32. Takes out the high. Pay yourself because you're expecting 30, 32 to potentially run lower or reverse on you because it's the bottom of the hour. Or move your stop loss to break even and just let it run. See if it continues to eat through. There's nothing in here. So it's other than this little box, right? Oh, that is the box from there to there. That could hold you back. That's the no-go zone. If you get through that, that's great. 32, you want to see tag get above here. And then drop back into 38. Anywhere from 38, because this is 32. So now from 32 to 38 is Crazy Ivan. You can get a Crazy Ivan look back. So that could be retesting this zone here. I'm looking for this zone here. Right on a 32. That's why I say pay yourself above the high, top of the hour, or bottom of the hour. You're getting to see the change in direction. Tips. So Hans, you'll see when you're looking at this on the weekend, see how that high's taken right at a time where you're expecting Crazy Ivan to occur. Then I don't want to see more than 50% of this wick get taken, right? If it does, then I'm expecting to see this get hit one more time. And there's 50% right there. And we slightly close below it. So there's 32. So now you want to see if 33 gets above that. If 33 closes below that, it'll look for this here. So then you're looking for that whole Crazy Ivan effect in here. And I want to see if it comes back and sees you and runs for you and takes out liquidity on the downside. You don't want to see, if we do see it run back, I want to see, does 38 bring us into this level right here? Does 38 bring us into this? Does 38 bring us into this? So all the levels you're kind of looking for. There's 32. If 32 is the swing, and that's coming back into the highs taken, graded response, that's a C-level trade right there. I want to see that keep going higher. So 32 is your grading candle at that specific time, right? So it grades that little response above the high. Now, if 32, you want to see that hold and see the rest of it push higher. If it doesn't, then we're expecting the SIBI to get tagged and this little order block down here. And it didn't, see. So the Crazy Ivan. Crazy Ivan. Oh, you're still here, Hans. Okay. Yeah. Crazy Ivan strikes again. Do we have any trades on here anymore? No, we don't. We got out of that mess. What about this one? Change in direction. Crazy Ivan. 32 makes a turn. And that's in NQ. It's in... there's your 33, 32, 33. No, 27. That's your 27 high there. 33, 34, 35. So you look for the 38 candle now. Crazy Ivan. I can't remember what we mentioned about in oil, silver. I just want to make sure that you guys are clear on that breaker block. Takes out this little low here. It takes out its own low. There's a small swing here. It runs down, creates our little low here, creates our reversal model, comes back, trades into it, get higher, pay yourself at the high. Comes back multiple times into this candle, but its mean threshold is the line in the sand, remember? Look at that. Tell me that's not a data point that's important. As soon as it runs up to the rejection block, pay yourself. See? It's critical, man. That whole block. Now, typically I take just the last candle, but you can either, how you decide to, whether you use one, both, or 3 or 4 is entirely up to you. But that's a nice little 50%er right there. Now here's 38, 37, 38. So Crazy Ivan inside this thing is just going back and forth. We're in this consolidation, which is good for all you CAM model entry people. If you see a CAM model entry, you want to see a nice displacement above this, come back, preferably a fair value gap with a nice displacement candle. And then I want to see that, yes, you ask and you shall receive. Get a nice displacement candle here, and then a nice graded response. A, B, C. There you go. That's a displacement. Consolidation. Nice displacement candle. 30 seconds. Freeze on 2, making a high on 2. Count the seconds there, because we're going backwards now. Four, 3, 2, 1. Now you want to see it come back lower. Now I want to see this create a small candle here and a nice little graded response, or come right back into our CAM model entry for 1 and 2. There's no 3, there's just the 2. Just waffle around in here for a little bit and give me a nice little where are we at? 30, 27, 26, 25, 24, 23. 43, 44. That's a buy. CAM model 1 right there. If I lose more than 50% of this on a close, it's the wrong side. You can get a wick in there. I don't know why it didn't take my trade. I tried to buy along there. It didn't go. Crazy Ivan saw you. He's coming for you. I had a nice little long right there off that high. And as soon as it hits that rejection block, pay yourself. If it hits the high, pay yourself. Move to break even. Let the trade run. I don't know why it didn't take my trade, but whatever. That's a CAM model 1 entry. You're paying yourself your break even now. Plus you've paid yourself a portion there. If it comes back against you, you don't want to see that this candle's not even valid yet. Get up there. We're looking for this last up close section here now. Right there. Upside objective. I don't know why I didn't take my entry. I put an entry right in off that sucker right there. So as soon as it takes that high, pay yourself. You're into break even. Zero stress. You're inside the bull trap. That's why you want to protect yourself. Right there, you're safe now. You've made some money. Does that make sense? That bull trap holds, and it just did a little run above that area there, which is into this little fellow right here. You see that? It hit the high of it. Now, if it snaps through here, that's the first go, no-go zone. The second no-go zone is in here. See that one from there to there? That's the next no-go zone. And then we have P1, P2, and P3 is embedded inside that big one there. But watch that little guy right there. Tell me that's not a data point. You see the reaction off that little snap? I don't care that it doesn't go lower if it still runs through it. I just like the fact that it hit it, reacted off of it, reset itself in a 1 minute candle. That was a high. Check the seconds on that one. I go down to a 1 second chart. I'm going to see the high there. 1 second chart right there. Look what candle it's on. It's a 42 and an 8 candle, 8 second. 7, 8, 9, 10. There's the 17, 18, 17. Remember 18 does a reverse on 17. That's in the seconds. It's a fractal. I've bottled up time in a bottle for you. It's a fractal nature. Look at the high of this one. It's a 4 second, 5 second reversal. Look at this one here. There's the 32, 33. Change direction. This high here. 50. Remember 50, 52? There's 50, 51, 52. Just look at the highs and the lows and you'll see them. This guy right here, it's ticking by so quick here, trying to keep up with it. There's a 16 candle. There's a 54, 55, continues to run. So that's the second chart. It works on all time frames, all asset classes. Sorry, 1 minute. Let's get back here. See that? Pay yourself. You got to have these things marked out on your charts and say, ugh, that's a go, no go zone. If it hits it, it can react off of that. And it's right at a time, a 42 candle that I expect to see price can turn. That 42 reacts off of that, then I could be running back lower. Right? We see you wanted to see 42 punch through that. So now we're back to 45, playing off of the highest up close candle before running out this. So I want to see it tag that and then start running higher. So 45, you want to see it hold here and start running higher. See how they're key levels? Key levels you're expecting turns to occur at the levels that we've been talking about. And I got a few more minutes and then I'm done for today. I have to see if all the trades I made today, I made quite a lot of trades trying to just show you this whole time in a bottle thing. I want to see 45 hold, 46 to 48. I want to see 48, 50, 52 start moving higher. 45 has to hold. If 45, 46, if 48 hits the mean threshold of this and we lose that, then look for these little imbalances here to get retested. I want to see those support price. This little breaker right here, that's the hold price. And that breaker lines up with this mean threshold right here. So If 45 doesn't hold, look for 48 to run into here. Keep going. Let's go. Right back at you, man. Right back at you. I don't know who's sending the love, but thanks anyway. I appreciate it. Here's 47. So let's look for 48 to make the reversal in here. If 48, then you got 50, 52. There's 47 making a run into the breaker. We're already through that mean threshold there. You see that? So look for the mean threshold of the breaker now. That will be, it'll be right there to right there. There's 48. Right at 50%. Do I expect to see a reversal right here? I do. I expect to see it turn and go back higher. That's 50% of that breaker. So if that we lose that, then we look for a run on the low. So 00, 2, and I'm looking for a run back into this one now. Watch, wait and see where that one closes in the next 18 seconds. $49, $50, $51, $52, $53, $54, $55, $58, $59, $60. So there's 58 seconds. Now you see how we've traded through the mean threshold, come back to the mean threshold. I expect to see that come lower and look for this target down here now. Change in direction, takes the mean threshold out, uses the mean threshold to start pushing lower. That's the discount box. There's box to box, but we haven't got a chance to get in on that box. We didn't get a wick into here to catch us running lower. So now you want to see if this breaker here now gets retested. Because now this is, if this closes below here, we're now stuck between this breaker and this SIBI. They're fighting over one another. Who's going to hold price? Who's going to reject price? So if we get a body close below here, and it literally opens and closes on it. See it right there? That's those really screwy, I can't make up my mind type decisions. So now you start to say, is this one, we're drilling down into this SIBI a bit more, right? So we have a market structure shift right here, right now. Right, we have this breaker. Anytime, enjoy your channel. Thanks, Shepherd, buddy. Appreciate it. So there's that breaker. We've literally did not close a body below there, right? We literally closed on it. We're inside the SIBI. Now I've got that whole range. I didn't get the BISI ran out, right? I didn't get to test it. We just quickly ran into this level. So if we don't come back and retest this and we run through this level, this becomes my, well, that would be the top of it, but this would be the zone I'd look for a continuation model, and I'd be targeting back down here again. Sorry, right here, this little line I have already put in here, right there. See, this one we wanted to go long here, got out just in a couple of bucks. This was the opportunity to go, ugh, after dealing with the psychology of taking a loss or a small win, you wait, and it literally says, look, I've traded, I've showed you that I'm changing direction. Now get short with me. Come on, perfect. Time to get in right here for a short. And then it says, look, you have one more chance. Look, I'll even let you get in here. No? Oh, okay. Then I'll let you get in here. Right here. Are you going to get in? No? Okay, forget it then. I'm not waiting around for you. I'll give you 3 opportunities to get in here, and you didn't take it because you were so worried about taking a loss right here. Ones and zeros, baby. If you're just trading the setup, you're trading it and you're saying, no, I want it. I want it. I see it happening now. It's proven itself out. It's proven itself out. Okay, if you break market structure, now I'm really going to take it. And they're like, okay, well, if it really breaks this structure now, it's too late. I'm not waiting for you anymore. That's the bus driver, sick and tired of circling the block, waiting for your kids to come for school. I've come back 3 times. That's it. You get 3 chances and we're out of here. And then you trade that one to your BISI reversal in a take profit model 3. So your BISI reversal's right here. So you keep your stop loss above that level right there. And you say, if I get a body break through that on a close, I'm on the wrong side of it. It breaks through, takes your stop loss. You go, I'm on the wrong side of it. We come back and retest this. I can get back in sync with the market and run higher. Bye-bye. Seems logical and easy in hindsight, right? But when it's trading, I tell you, you got to get out of your own way. You got to get out of your own way. Now on a 5-minute chart, this is coming right into this guy is coming right back into a 5-minute chart. Watch right here. This order block. Remember the bull trap? We want to see the bull trap get taken on the upside. It does. We trade back into the bull trap. You want to see this leave now, and it's a 50 candle, right? It's a 50-minute candle, or it's a 50-minute 5-minute candle, and it's a 53, 54, 55. Come back right into this level right here. I'd love to see that go right here. Give me a 55 into here. Bounce off that. That can be anywhere inside that box is fine by me. High, open, mean threshold. And here we are at a 54. Let's watch a 55, see if it bounces off of here. And notice how it's this breaker, this last down close candle on the swing that takes out this whole high. It doesn't, it's a mitigation. It runs up and then we get a new swing low here. This would be the breaker, runs through that. That would be like the parent breaker of that whole run, because that's still sitting inside here. So let's see if we get a little tap off of here. There's 40, 54, 55. Give me a little wick. That's fine. No, back up. We don't want to see that drop. It's actually dropped below that breaker now. Retest. Forget that now. A way you can kind of use this if you're using the Tibbs rule is we'll wait and see where that closes on the 28 in 25 seconds or so. Is wait for the low or that time. Let's say this is the 55 now. If I get this swing, wait for confirmation that that level, that time gives you your next reversal. If it doesn't, then don't get in the trade. Like if you just take that right on that time or that price without seeing the reversal, see how that 55 now go all the way down to 58 now. That 55, see how the 52 was it turned on 51, 51 turned, and 52 didn't make a low. So wait for 55. 55 didn't, wait for 58 now. I see how they're not making any swing points. Wait for the next one. That's 58 or 00. So if you're short on that, then you just sit there and go, oh, I'm not getting my low. Sweet, let it go. I'm not getting a low, I'm not getting a reverse. Keep going. Unfortunately, you have to wait 3 candles to see a reversal, right? 1, 2, and the very next one. This is 56, 58 will take us, and then then you start looking for where does 58 take us? 58 can bring us back into here. If this 57 candle goes a little lower and takes that candle, I'm looking for that low or that high right there of the SIBI and this low as my support. So here, I want to see 58 pop in here now, and I'll continue going lower. Now, if 57 closes through here, 58 comes back in, look for a reverse back in this direction, because that's the no-go zone. Retest of the breaker. Institutional order flow entry. Eight seconds. Wait to see where it closes. So now we're back of if the no-go, we're not no-go lower. That's just a run. Come back into here at 58. Give this a little tag. Already over the discount already. I was kind of hoping it would come back and tag that 50% of that. Did I get that in the right spot? I did not. That is 50% of it. From there to there, that is 50%. Get it? Creates a little swing. Are we coming back to tag this, or are we actually taking this out here to go higher? Thanks, Darren. Have a nice weekend, everybody. See you later, Hans. Take care, buddy. I'm done almost too. I just want to see where this thing goes, and then I'm out of here. Where are we sitting for the account? We're pretty much where we started. I think I started off the day at 289 something. So I think I pretty much broke even. There's 58 on the swing. Come on back. So this would be a 2, looking for a 2 to tag here and then send it higher. Or because we haven't closed above here on a reversal, we have a go no go zone. So this should provide support for this to get cleared and activated. So I'm looking for a retest of this. If it trades back through it, stay on the horse. It's spinning around on you now, so we could send this lower. So this is a 00. Come on back. Tag it on 0. Oh, you're all gone too. I didn't see Hadi's gone there. Have a great weekend. See you. Yeah, Hadi. He's probably long gone. There's the tag right on the bottom of it. And that's the 01. Don't you love that little data point? Bounce right off it. Now I want to see if it holds or if we pop through it and then close below that level. 2, send it up. Send it up. There's a swing there. Send it straight up. I just want to see it break this high now so I can go. If it breaks the high, great. If it takes this low out on this guy, watch for a retest of this and then run the lows. See, this support's going lower. Hit off the breaker, 50%. There's a small little imbalance right here. See that? We traded back into it, going lower. I want to see this break now. If that breaks above here, I want to see that, tag that and go higher, take the high out. So far that's holding. That's holding. So I'm between here and here now. Those two data points are arguing, fighting over each other. Who's the strongest? Who's the weakest? That's your video game. Anyway, I'm out of here, but keep your eyes on those 2 points. See who wins the battle now. If this loses the battle here and we get back up on top of this, look for this SIBI to provide some support to run back through. There's a little tiny imbalance way up there. See that little guy? Look for that one more time and get through that. And you're going into lunch hour, so it can be quite choppy. So anyway, that's it for me, you guys. If you like what we did, thumbs up. I do appreciate it. Like, subscribe, notify. We're all here. I'm here for you every day, going over the charts. I'm trying to give you precision data points to look for, and hopefully you get a bit of an idea what this time in the bottle is about and how time in a bottle can be useful as just another tool. It's nothing precision crazy, but it is it can be if you use it correctly and you use it in conjunction with the other stuff I've been showing you about the 4 trading models. You can find a level of precision, and I'll continue to refer back to it. And you'll see that there's a crazy level of precision on this. And then it's just a matter of execution, right? And practicing it. So anyway, until Monday, I wish you guys all the best. Thanks for coming out. I appreciate all of you guys. Tell your friends, pop on by, share the secrets with your friends. We're here to help people out. I'm here to help you get to where you want to go. Reprice action with a level of clarity that hopefully helps your trade model. Doesn't have to be mine. As long as it helps you trade your model better, then I'm happy for you. Shepard, again, when's your surgery? It's not this weekend, is it? It's next month. I hope your surgery goes well, and you guys have an awesome weekend. It's holding. See how it's holding right now? They're battling back and forth between each other. End of the month. Okay. All right, buddy, my fingers are crossed for you. My heart's on the sleeve for you. I really I want it to go well for you. But until then, I will see you next week. Shepard, tune in, and I will see you next week. And I want to say I wish you all the best of luck for the end of the month too. So make sure you pop in. Vitaly, you're welcome, my friend. Have a great weekend, and I will see you guys bright and early on Monday. I might do a Sunday review, see where we're at. But anyway, wish you guys all the best. I'll see you on Monday.